Hey guys, welcome to another video with myself, Andy Demi, from the London Trading Institute. So today guys, I'm going to be looking at the gold chart, and I'm going to be speaking about essentially the long term, where I think gold is going to go, when is it time to buy gold, and in the short term, where are the best trading opportunities, which levels should you be looking out for. Now, if you are new to our channel, then do hit the subscribe button, and if you are enjoying our content, please like the video because it just helps us out with YouTube and it gets it out to more people. With all of that being said, guys, I want to get straight into the chart, and please comment below and let me know your own thoughts about gold. You know, what are you looking at? You know, what areas are you looking at, and do you agree or do you think something different? Okay, that's the beauty of the market, guys. We will all have different opinions, and absolutely everybody's opinion is certainly valid. So here we are. So we got this is gold, and this is the weekly time frame. Okay, now, you know, it's obviously open to interpretation, but at the moment, what you could probably think is that we look like, you know, we are kind of doing that kind of pattern that everybody's very, very familiar with, which is that double top pattern, right? Is this a double top? Well, at the moment, if you just kind of zoom in, you can see that this market is holding at this key area of support, and we've kind of had a very similar high point that got created, which means that the pattern is certainly valid at this stage. Okay, so if we were to break this area of support here, then we certainly could say that we are now in, you know, in motion for this pattern. So if you believe that this is a double top pattern, well, then you need to take the distance from high to low to estimate where the market might go to. Okay, and then you can kind of look to see if that makes any sense, and we'll do that in just a moment. Now, the other thing I want to show you here is this white line here. Okay, this is what we call the long-term trend line. Okay, this is the long-term trend line, and you know, this is an area that the market may come back to. Okay, it did it, you know, it got close here, and here it did hit it. And now what you can do is you can also, because it's only going to be a rough estimate, you can double up here. So you can see, as long as you've got two touches, there's one touch, there's two touches, you can do something like that. And you could even triple up, because there's a little point there that might go through another point. So there, so you've got a point there touching another point. So as long as you've got at least two, in this case we've got three, this becomes a triple kind of outer trend line support. Now let's take the distance from high to low and measure it. So this is the distance from high to low. Okay, like that. And then we're going to take this and we're going to project it down. Okay, so from the breakout. So let's say the breakout is roughly there, that blue line. Okay, in fact, what we'll do is we'll just put it on the blue line because the rest of them are spikes, and we'll just retake that again. And that's basically where it would bring us. Now, if I just kind of take my crosshair there, I'll stick a horizontal line there, like that. Okay, and what's interesting about that is it brings you really, really nicely into this really strong past resistance, this kind of block here. Right now, I know some of you might be watching this and thinking, well, but it goes below this area. You've got to remember, guys, we're looking at a weekly time frame, so it's possible, like you've seen in other areas like this, where you get spikes, right? So for me, what I would do is I would just actually mark all of this down as a potential area to buy. What area is that? Well, it's between kind of, let's call it even 1300 to 1400. So as a long-term investor, I think that's a really, really nice buy zone for gold. Okay, that's for my personal, you know, for my own personal preference and investments. Okay, obviously you have to make your own decisions, because this stuff carries risk, and you have to be willing to lose if you're going to invest. So that looks interesting. Now, the other thing is that you might be able to see these lines here, these yellow lines. Well, if you look back over here, the market was trending really nicely until it broke this line. So what I've done is I've taken this line, I've projected it over here, and you can see the market has basically broken this line. So it definitely looks like the bears are starting to take control. You know, we're not making lower lows at the moment, we're not making lower highs, but if we can close below here, then it's going to be an area which is going to be, we're going to be really looking for to go down here. So how might this do it? Well, let's start by looking at the cycles, and we can use the Fibonacci. So if we take this high to low to start with, you can see we had an A, B, C. Okay, so the C's here. Hold on, let me just double check the coordinate style. Okay, yep. And so the market went, so from its this is the 618, so the target would have been here. We had an overextension to the 200, which is actually very, very interesting, because that makes this even more likely that we're going to push lower, because normally when the market is basically selling off, you get these overextensions. So instead of it going to its 618, it's ended up closing to its 200. So it takes out these lows. It wouldn't surprise me right now, naturally, that we get a bounce, okay, in this area, because it's an area of support. Maybe we get a bounce, and the bounce, we could use the Fibonacci to basically help us. So what you would do is you take this high here and then this low here, and we can see where the potential areas. So the first one here, this is the 23.6. Mark this down, 1755. That's going to be a great upside target if you're a short-term trader right here. If this is to then go, so it could be something like this, where we get a bounce, and maybe then it goes a little bit higher, maybe to the 38.2, maybe even to the 61.8, okay? But you're going to be basically looking for areas where you could potentially look for a short. And so this block, and I'm going to draw a block there, then becomes like, here's the 1618 and here's the 200. That's basically what I sort of potentially see in gold, and I'll mark all of this area here as area potentially to sell. Now, because you can see here, this is a nice area of past resistance that becomes support. It's not going to go down in a straight line, okay? And if you go to the lower time frames, there'll be even more areas of supply and demand that you need to basically tackle, okay? So you can do short-term movements. However, overall, this is a potential plan of how we go down. I expect that the buyers will come in here, at least push it back up to 1760. If we get through that level, then start to look for the 38.2, and then the 61.8 is a really great zone. In fact, this here for me would be the preference, a push up to here, past supply zone here, you can see, and then looking to start to sell in this block here, between here and maybe even here, testing this angle line here, and put stops above these highs. All right, so that's basically what I would be looking at on gold. And like I said, you want to use the 4-hour, the 1-hour time frames to take advantage of the smaller swings and take into account, where the major levels are, because that's going to help guide you as to where the highest probability setups are. So let me know, guys, in the comments what you think of that, if you're on board with that, if you have your own ideas. And don't forget to subscribe and hit the bell notification if you're new to our channel. And please like the video if you enjoy our content, because like I said earlier, it really does help us out, and we really, really appreciate it. Thanks for tuning in, guys. As always, take care. Speak to you soon.